Imagine waking up tomorrow to find out that the very metal you trusted to protect your wealth has been rigged against you for decades. Silver, something people have relied on since the dawn of civilization, is at the center of a financial scheme so massive, so well hidden, it could make the 2008 crash look like pocket change. What if I told you that every chart, every price spike, and every market correction you've seen in silver was manipulated on purpose, and billions of dollars of real investor money are quietly disappearing behind the scenes? This isn't conspiracy theory chatter. This is the silent warning you've been ignoring, and if you miss it, it could cost you everything. Silver has always been the underdog of precious metals. Gold grabs the headlines, dominates portfolios, and gets the shiny attention of the mainstream media. But silver is where the real action happens. It's smaller, it's cheaper, and that makes it far easier to control. Historically, silver prices should reflect its industrial demand, its rarity, and its centuries-long role as a store of value. Yet, time and again, we see prices being artificially suppressed, manipulated to stay low while the powers behind the market quietly accumulate massive amounts of physical silver. And here's the kicker. While millions of everyday investors think they are rebuying at fair value, a hidden system is quietly starving the market of real silver supply. The mechanism is shockingly simple, but devastating in its effects. Large financial institutions, hedge funds, and even governments have created a web of paper contracts, futures, options, and derivatives that allow them to bet against silver without ever taking delivery. In other words, they can sell silver they don't own, suppress the price, and profit when the market inevitably reacts to their manipulation. Meanwhile, the actual physical silver, the stuff you can hold in your hand, becomes harder and harder to acquire. Storage facilities are running low, premiums on coins and bars skyrocket, and retail investors are left scrambling while the manipulators quietly accumulate. But why would anyone go to such lengths to suppress silver? The answer is staggering. Silver isn't just a metal, it's a hedge, a financial insurance policy, and a currency in disguise. When inflation spikes, currencies collapse, or the next global crisis hits, silver has historically been a safe haven. By keeping the price artificially low, the manipulators are essentially preventing ordinary people from protecting themselves. It's a systemic control measure, a financial stranglehold that ensures the wealthiest players stay ahead while everyone else is left exposed. And the proof is there if you know where to look. Every time silver starts to rise, like in 2011 when it briefly hit $50 an ounce, massive interventions occur. Margin hikes, sudden futures dumping, regulatory crackdowns, they all appear out of nowhere, and the price tumbles back down. These aren't coincidences. These are deliberate moves designed to keep silver in a price range that benefits those in control. And it works because the general public has been conditioned to trust the market, to believe that the price is set by supply and demand alone, when in reality it's anything but free. This silent war on silver isn't just an abstract financial game. Real people are losing real money. Retirement accounts, savings, and lifelong investments are being quietly devalued. And it's happening in plain sight. Exchanges like COMEX and LME are supposed to provide transparency and fairness, yet the system is stacked. Physical silver is being hoarded, paper silver is being traded, and the market is balancing on a knife edge. One misstep or sudden surge in demand could expose the scam, sending prices soaring and creating chaos for those who ignored the warning signs. It's easy to dismiss this as paranoia until you start looking at the numbers. Global silver production has been relatively flat for years. Industrial demand keeps climbing, yet prices remain inexplicably low. Meanwhile, insider accumulation grows, with reports of hundreds of millions of ounces being quietly stored, waiting for the day the manipulation finally breaks. This isn't theory. This is a pattern, repeated over decades, leaving breadcrumbs for anyone willing to dig. The question is, are you willing to look? Because the silver market isn't going to wait for anyone. Every day you ignore the warning, the risk grows, and the window to act before the next crisis narrows. Understanding this isn't just about investing, it's about protecting your financial future. The problem is most investors are looking at silver like it's just another commodity, like oil or wheat, rather than the strategic asset it really is. They see a low price and assume it's a bargain, but they don't realize that the price has been artificially held down by a sophisticated network of financial giants. This isn't tea luck or coincidence. It's a carefully orchestrated effort to control access to a resource that, in a crisis, could mean the difference between financial survival and ruin. This control is subtle, almost invisible. It's hidden in margin rules and trading platforms and massive short positions that the average investor can't even comprehend. And it's not just silver. These tactics ripple across other markets too. But silver is the one that tells the clearest story. Because it's smaller, more volatile, and historically less regulated than gold, it's the perfect playground for manipulation. The same forces that can influence silver can indirectly sway broader financial stability, making it not just a metal, but a barometer of systemic risk. Look at the industrial side of silver. Every smartphone, solar panel, and electric vehicle relies on it. Demand isn't theoretical. It's concrete, growing every year as technology expands. But the price refuses to reflect that reality. Why? Because the manipulators are betting that if they keep it low, they can absorb the surge in demand without triggering a price explosion that would hurt their positions. They're playing a decades-long game of chess, while most investors are playing checkers. And the stakes are enormous. If silver suddenly breaks free from this control, it could soar to prices that seem unimaginable today. That same surge would hit paper traders who are shorting the market, potentially triggering margin calls, defaults, and a cascade of financial shocks. The people who ignored the warning signs would be left holding the bag, while the insiders walk away with fortunes. This isn't theoretical. It's exactly what has happened in smaller scale manipulations in the past, repeated over and over on an ever larger stage. Even governments are complicit, whether intentionally or through inaction. Regulators often issue warnings or investigate manipulation, but meaningful consequences rarely follow. Fines are paid, trades continue, and the system resets itself. Meanwhile, the public is left assuming the market is fair. That assumption is the real weapon here. If people believed the game was rigged, the dynamics of buying, selling, and accumulating would change overnight. But as long as most investors trust the system, the manipulators maintain control, quietly tightening their grip. This isn't just about money, it's about timing. Understanding when and how to act in silver isn't intuitive. It requires looking beyond headlines, beyond daily price charts, and seeing the patterns. It requires recognizing that volatility is often manufactured, that spikes and drops are sometimes orchestrated, and that real physical supply is more scarce than it appears. Ignoring these patterns isn't just risky, it's dangerous, especially if you're relying on silver as a hedge for your future. And here's the irony. The very transparency tools the market offers, like COMEX reports, are part of the illusion. They show positions, open interest, and volume, but those numbers can be misleading. Paper silver dwarfs physical silver by multiples, and what's available isn't always deliverable. The average investor can be fooled into thinking liquidity is abundant, when in reality, the actual metal is quietly vanishing into vaults, controlled by the few who understand the real game. The question you have to ask yourself is, are you willing to be one of the millions blindsided when the next big move hits? Because silver doesn't just rise or fall in isolation. It's a trigger for a chain reaction in currencies, equities, and even global trade. When the dam finally breaks, the effects will be felt far beyond the shiny metal itself. And those who are prepared will have an enormous advantage, while those who ignored the warnings may find themselves powerless to act. The truth is, silver's silent warning isn't just about market manipulation. It's about survival. It's about seeing the cracks in the system before they become chasms, and understanding that every price movement, every sudden spike or crash, is a message if you know how to read it. The manipulators rely on fear, ignorance, and complacency. They know most investors won't dig past the surface, won't question the official narratives, and certainly won't prepare for the scenario where silver finally breaks free from decades of control. But imagine what happens when it does. The moment paper silver fails to meet demand, the physical market explodes. Premiums on coins and bars skyrocket. Storage shortages become panic, and what once seemed like an affordable hedge turns into a priceless asset. Those who anticipated it, who quietly accumulated physical silver over the years, suddenly find themselves in a position of power. They're not just protecting wealth, they're gaining options, flexibility, and leverage in a world where financial certainty is vanishing. And this isn't some far-off hypothetical. The signs are everywhere if you know what to look for. Declining global mine production, hoarding by central banks, surging industrial demand, and the ever-growing gap between paper contracts and real silver. Each factor compounds the next, building pressure like water behind a dam. The longer the manipulation continues, the greater the potential explosion. And when that pressure is finally released, the ripple effects won't just be felt in the silver market. They'll shock currencies, disrupt trade, and expose the fragility of the very financial systems people rely on every day. So, what should you do with this knowledge? First, understand that silver isn't just another investment, it's insurance. It's a warning system built into the market itself. Second, pay attention to physical supply, premiums, and market behavior, rather than relying solely on charts or analysts who may themselves be trapped in the manipulated narrative. And finally, recognize the bigger picture. This isn't about short-term gains. It's about positioning yourself wisely before the next major financial correction arrives. The lesson is clear. The largest financial scam in history isn't flashy, it doesn't make headlines, and it doesn't announce itself. It's slow, methodical, and nearly invisible to anyone who isn't paying close attention. But it's there, hiding in plain sight in the disconnect between supply, demand, and the paper prices you see every day. And ignoring it won't just cost you money. It could cost you financial security in ways you never imagined. The silver market has been whispering its warning for decades, yet few have listened. What seems like normal price fluctuation is actually a carefully orchestrated suppression designed to control wealth, manipulate risk, and leave the average investor exposed. But the truth is undeniable. Silver is finite, essential, and increasingly scarce. Those who recognize the signs, who act before the system breaks, will not just survive, they'll thrive. This isn't speculation. It's history repeating itself under a new, silent guise. The question isn't whether silver will break free from its chains, it's when. And when it does, will you be ready to heed the warning, or will you be left wondering why you didn't see it coming? The choice and your future depends on it.